Hello everyone, myself Dr. Mohammad Hashim Khan, Assistant Professor, Thakur College of Science and Commerce. And today we are going to be studying about life insurance. As well as we will also have a look at the different advantages associated with buying a life insurance policy. At the same time, we'll also have a look at the different factors which is responsible for the premium. So first we'll have a look at what exactly is life insurance. So it says life insurance can be defined as a contract between an insurance policy holder and an insurance company, wherein the insurer, that is an insurance company, promises to pay a sum of money in exchange for a premium. That premium is nothing but the consideration which the policy holder is going to be paying for the life cover provided by the insurance company. And that sum of money which is going to be exchanged, or that individual which is covered by the life insurance policy, he will get it only upon the death of that insured person after a particular period of time. That period could be a term period, or it could be for the whole life of an individual. Because in life insurance, there are different types of policy. First, you have term insurance policy, you have whole life insurance policy, and endowment policy. Apart from that, there are other policies as well. So basically, in life insurance, two parties are involved, wherein one, that is insurance company, promises to pay a sum of money for which the individual is insured, and in consideration, that individual pays a premium. Okay, in the further topics, we'll understand the amount of premium and what factors that premium is dependent. Moving ahead, here you can have a look at the different life insurance companies in India. You might be aware about Life Insurance Corporation of India, that is LIC. Apart from LIC, there are other insurance companies also which provide life insurance products. SBI Life Insurance Company, ICICI Prudential Life Insurance, SDFC Standard Life Insurance, Bajaj Alliance Life Insurance, Max Life Insurance, Birla Sun Life Insurance, Kotak Life Insurance are some of the insurance companies which operates in India and provides life insurance products. Now, we will have a look at the advantages associated with life insurance. The first one talks about it encourages saving. Yes, you heard it right here. Not only you get a life cover, but also you or life insurance policies encourages people to save. Because in normal case scenarios, if you save your money in your bank account at certain point of time, if there's a need, you can withdraw it. But your you will only get that particular benefits if you save that particular money for a longer period of time. That is a term period which is there in life insurance policy. So you have to continuously pay the premium, and you also have a cash value component, or you also call it as saving component. So a part of the premium is been taken by the company for the risk cover provided by them, as well as the another part has been used by the company as a cash value component, which is saved on behalf of the policy holder, and that has been reinvested, and interest has been given to the policy holders on those savings. So that's one. Apart from that, you already know that people take life insurance for covering the risk that might be any uncertain situation which might lead to the death of an individual, and the financial problems that the family might face in future. So in order to cover the financial problems in future, an individual might take life insurance, and in case of uncertainty, the sum assured has been given to the nominees, basically the family members of the individual, and the financial problems of future is been secured. So it also provides a risk cover. That's one more advantage of life insurance. Apart from that, it also has accidental death benefit, wherein during the term period, if it at all it is a term insurance, and during that particular term period, if the individual dies because of accidents, then there are a lot of companies wherein if you add a rider, which is add-on benefits, in which you have the option of adding a accidental death benefit. In that, you get extra benefits apart from the sum assured. In certain cases, you get the double the sum assured. So again, that is one more benefit associated with life insurance. It also says that here you will get easy settlement of claim, wherein in case of death of an individual, the policy documents have been submitted and accordingly the sum assured has been given to the nominee. So here it is not a very complex procedure wherein there are a lot of formalities that needs to be uh, put forward, but here within easy and few procedures have been used to settle the claims of an individual. Policy documents are also being used as a collateral securities by the policy holders to avail loan from the banks. In case if you require a loan, the policy document itself can be kept as a collateral and the finances that has been required by the policy holder can be availed from the bank. So the policy, life insurance policy acts as a collateral security also. In majority of the cases, a lot of individuals try to take benefits of life insurance policy by getting the tax benefits under 80C of the Income Tax Act. So there are a lot of deductions that you get, and that deductions has been used by the individuals to reduce their tax liabilities. It also says that the same life insurance can be availed for groups. So in organizations, the company buys life insurance policies for the whole group, and the benefit that you get is you have to pay lesser amount of premiums in compared to when you get a life insurance for a single individual. So again, that's a benefit for the organizations as well. Long-term investment is considered to be another benefits. Here you invest or you buy that particular policy, which is for a longer period of time. Say, for example, 20 years, 30 years might be the term period for which you are going to be buying that particular policy. And after that, you are going to be getting the sum assured if there is some uncertainty that happens to that particular individual. So you are, like I said before, also there's a living benefit also been given to that particular individual if he completes that particular term period. So again, it's a long-term investment that you are making, and after long term, you are going to be getting a sum assured, which is going to be securing your future. You also have experts in the life insurance companies who are going to be giving you advices regarding the kind of policy that you're going to be buying. So you don't have to worry about the policy and the benefits associated with different life insurance policies. So you yourself don't have to look forward and search for too many options. Here you can contact a particular agent and he will, with this expertise, he will guide you regarding the best options as per your need. So the knowledge of the experts will help you to choose the best insurance policy. Moving ahead, we will try to understand what are the different factors based on which the premiums are decided. The premiums are not going to be same for each and every policy that you buy. Depending upon the different policies that you buy, the premiums will be decided. For example, for term insurance policy, usually if you're buying a 1 crore policy, the premium is going to be lesser. Here, the premiums are going to be in the range of 500 to 1000 per month. But if you try to buy a whole life insurance policy, which provides you a cover throughout your life, in that cases, the premium is going to be higher because it is providing you a cover throughout your life, not like term insurance, which is going to be for a specific period of time. Now, let us have a look at the different factors based on which the insurance premium are going to be decided. The first one is age. Depending on to the age of a particular individual, the premium is going to be decided. So if you are at the age of around 25 and you're buying a term insurance policy for next 30 years, 40 years, then the premium is going to be lesser because your age is less. The chances of risk associated with an individual who is at the age of 25 is much lesser. In case if you are at the age of 50 and you want to still buy an insurance policy, in that cases, the risk of death is higher, and for that reasons, you will have a higher premium. So age is one factor. Apart from that, it also says gender is going to be one more factor. It says there are few studies which have shown that women live longer than men. And for the same reasons, the life insurance premium is going to be lower for women as compared to men. Now, also considering the health condition of an individual at the time of buying that particular policy will also decide the premium. If you are an individual which is fit and fine and healthy, in that cases, your premiums are going to be lesser. But in case if you have a pre-existing illness, then in that cases, you will have to pay a higher premium because the chances of death is higher in that case because you are already going through a existing illness. For that reasons only, the company, the insurance company, the underwriters are going to be charging a higher premium because of the higher risk associated with the current health condition of the existing individual. Family health history is also going to be one of the factors which will help the insurance company and the underwriters to assess the risk associated with that individual. If the individual's family history shows that they have a hereditary illness, then probably that individual is going to be having a or will have to pay a higher premium as compared to an individual whose family history doesn't show any hereditary illness. So your family history might show that your family has a history of diabetic or obesity. So in that cases, it is going to be the company is going to be charging a higher premium for the higher risk associated. Another factor is smoking and drinking alcohol. So if you have a lifestyle wherein you smoke on a very regular basis, as well as you drink alcohol on a regular basis, in that cases, your current health condition is not fit and fine, and you might have a higher chances of incurring bad health situations in future. So here, the insurance companies are going to be charging a higher premium for individuals who smokes or drinks alcohol. The amount of coverage that you are taking will also decide the amount of premium that you are going to be paying. So if you are taking a cover of 10 crores, probably a higher premium. And if you're taking a coverage of 1 crore, then probably comparatively a lesser amount of premium will be paid. Apart from that, the occupation that you are involved into will also decide the premium. So a lot of individuals working into different industries, for them, different premiums are going to be set. If you are working into a industry where there is a high risk, then probably a high premium would be paid. Just like, for example, here it says if you work in construction or if your job puts you at a kind of risk, such as regular exposure to chemicals, then probably the insurance company will charge a higher premium because there's a higher risk of that individual facing bad health conditions in future, which is leading to death of that particular individual, and the company will be liable to pay the sum assured earlier as compared to an individual working in a company which is less risky jobs. Now, it also says that the type of coverage that you are buying will also decide the amount of premium that you will pay. So it says the type of coverage that you opt for can increase or decrease the life insurance plan's premium. If you add any riders, that is nothing but an add-on benefit to your existing standard insurance plan, then the premium will increase. Just like death due to accidental or accidents is one type of rider that you can add. In a similar way, you have different type of riders, that is add-on benefits that can be added, just like another one is critical illness. So that is again one of the riders. If you add that also and increase your coverage, then probably you will have to pay a higher insurance premium. It says a longer policy term can also result into a higher premium compared to a shorter term. And in addition to this, the type of life insurance plan that you have selected will also affect the premium. For example, the term insurance is the most affordable form of life insurance. But if you go ahead with buying whole life insurance, then that is in that the premium that you will have to pay is comparatively much more higher than a term insurance plan because it provides you with a life cover throughout your life as compared to term insurance, which is only going to be for that particular term. And if that term gets over, the company, that is the insurance company, will not be liable to pay you the sum assured because your term is over. But in case of whole life insurance, it is going to be throughout your life. So in that cases, the life insurance policy premium is going to be higher. So yeah, that's all for today. Thank you.